Whether you're aiming to launch your own venture or take over an existing one, there are certain business models that have proven to be nearly failure-proof, even in the face of economic downturns. These are industries that consistently generate cash flow year after year, regardless of market conditions. In this video, we'll break down exactly how to identify these types of businesses, how to acquire them, and how to start building serious long-term wealth through ownership. When it comes to smart financial moves, few things are more powerful than owning a company. While many investors focus on public markets, there's a growing strategy that involves acquiring smaller, private companies that are already profitable. Second, we'll reveal 10 recession-resistant business models that consistently perform regardless of market cycles. But when you acquire a business, you're gaining access to immediate cash flow. The first on the list is waste management and recycling. No matter where you live or what the economic climate is, one thing remains consistent: people produce trash. Whether it's the East Coast, West Coast, Asia, or anywhere in between, waste is a constant. Businesses that handle garbage collection, recycling services, or even trash bin cleaning tend to remain in demand in both good times and bad. And that consistency is exactly what makes them attractive to long-term investors. The company's history of earnings becomes your earnings from day one. That's a powerful shift. Add to that the possibility of buying into industries that are recession-proof, and you have a real strategy for surviving and thriving even during tough economic cycles. And third, we'll walk through a step-by-step process on how to actually find and buy one of these businesses yourself. Starting a business comes with a notoriously high failure rate. Studies show that over 90% of startups don't make it. You might have a great idea, invest time and money, but still find yourself with nothing to show for it. By contrast, acquiring an existing company eliminates many of those early-stage risks. You're stepping into a business that's already operating, often for 5 or 10 years or more, with systems, staff, and a customer base already in place. This video presents a clear playbook on how to do exactly that: find businesses that are stable, cash-flowing, and resilient, and begin creating generational wealth that doesn't just pay you today, but also supports your family in the future. Let's explore 3 essential ideas. First, why acquiring a business is often more practical and less risky than starting one from scratch. Before we jump into all of that, take a second to subscribe. This kind of information has helped countless people shift their financial future, and this video may do the same for you. Now, let's begin with why acquiring a business is a smarter path than starting from zero. More importantly, many new startups operate at a loss in the beginning, burning cash while trying to grow. Now, let us talk about the reason you clicked on this video. The 10 businesses that rarely fail. A business focused on the waste management sector is a classic example of recession resistance. These operations continue to generate consistent revenue regardless of economic cycles, simply because trash doesn't stop accumulating. When evaluating a business like this, it's important to understand the gross margin profile. If you're unfamiliar with gross margin, it's essentially the revenue a business brings in, minus the cost of goods sold, often referred to as COGS. That's the cost involved in delivering the product or service. As more people invest in real estate, whether for flips, rentals, or long-term holds, there's growing demand for professionals who can manage those assets day to day. Many property owners don't want to deal with tenant issues, rent collection, or property upkeep. That's where property managers come in. This service-based business applies to single-family homes, apartment complexes, and townhouses. And as long as people continue buying real estate, the need for quality property management services will persist. Gross profit divided by total revenue gives you the gross margin, a key metric investors use to estimate how much cash a business might be able to produce. Waste management businesses often run at gross profit margins between 30 to 40%, which signals solid, reliable income potential. Next on the list is the beauty services industry, specifically female-focused services, like hair salons, nail bars, and lash studios. These services have remained resilient even during times of economic stress. Like the 2008 recession, cars get dirty year-round, and for many people, keeping a clean vehicle is tied to a sense of personal pride. Car washes are attractive because they require relatively low labor and infrastructure. Whether it's a fully automated tunnel wash or a self-service bay, the operational costs are often minimal compared to the revenue potential. These businesses can bring in gross margins upwards of 60%, especially if optimized and located in high-traffic areas. Regardless of whether times are tough or booming, people continue to invest in personal grooming and self-care. This behavior spans across different regions and demographics. The beauty business tends to operate with healthy margins, with gross profits often ranging between 40 to 50%. That makes it a strong candidate for long-term, cash flow-focused ownership. Another solid business model is the car wash industry. Following that are laundromats and dry cleaning businesses. People wear clothes, clothes get dirty, and not everyone has unit washers and dryers. That keeps laundromats in constant demand. While the space can be competitive and pricing sensitive, there's significant upside if the location has limited nearby competition. Offering add-on services like wash and fold or dry cleaning can boost revenue and raise profit margins. Laundromats can run with gross margins between 30% and 50%, depending on the model and services offered. Lastly, property management is another business model with strong fundamentals. Let me know when you're ready to send the next portion, and I'll continue rewriting it in the same faceless, paragraph-based tone. If a property exists, and the landlord doesn't have time to handle its daily needs, then naturally there needs to be someone who steps in, and that's where the property manager comes in. This is the business model, and it's one that can be invested in with confidence. What makes it especially appealing is the recurring revenue structure. People pass away every day, and honoring them through funerals, burials, or cremations is part of life. That's a massive amount of financial insight, and if you're finding this valuable, now's a great time to subscribe so you never miss updates about saving, investing, or buying businesses. Funeral homes and cemeteries are typically run by families, but many are open to selling when the next generation doesn't want to take over. Whether it's spiders, centipedes, or worse, many homeowners are quick to call in the professionals. Pest control companies provide a necessary service, something most people are willing to pay for rather than handle themselves. This includes both reactive work, like eliminating infestations, and preventative work, such as pest-proofing a home. The work might be unpleasant, but that's exactly why the demand exists, and the numbers back it up. Pest control businesses often operate with gross margins ranging from 40% to 60%, making it both a needed and profitable venture. If approached with respect and care, these businesses can be excellent long-term investments. The demand is constant, the services are essential, and the margins are strong, often between 50% and 60%. It's one of the more recession-proof models out there, and despite the emotional nature of the work, it offers consistent, high-margin returns for those who can manage it with integrity. Property managers often earn a percentage of the monthly rental income, usually between 2% to 5%, making it a steady, predictable income stream. As for profitability, property management companies can enjoy gross margins between 30% and 50%, particularly if the operation is tech-enabled and doesn't require a large team to manage multiple properties. Now let's move to HVAC, heating, ventilation, and air conditioning. Every building needs fixed services to stay livable in extreme seasons. Whether it's keeping a home cool during a heat wave or warm during winter, these systems are essential. There's a vast number of companies out there, and acquiring one can be a smart move. These businesses generate revenue through installation, maintenance, and emergency repair services, all of which are high-ticket and often urgent. Gross margins for companies typically fall between 40% and 50%, sometimes higher, and because the space is so fragmented, there's real opportunity to acquire one, build expertise, and then expand by acquiring others, creating a small, regional platform with strong, scalable cash flow. Then there's the business of death funeral services. While not the most cheerful industry to talk about, it's undeniably stable at this point. We've covered 7 cash-flowing, recession-resistant businesses. Let's continue with number 8, pest control. If you're anything like most people, you don't enjoy dealing with bugs. Now here's one business that might surprise you: self-storage. The demand is rising fast, especially as more people move into crowded cities with limited space. They simply don't have room for all their belongings. That's where self-storage facilities come in. Whether it's storing furniture during a move or boxing up seasonal items, people are constantly in need of extra space. As an investor, a self-storage business functions a lot like real estate. You own a piece of land, you build storage units, and then you rent them out month after month. Pick a specific region and industry you're interested in, then review the listings. Let them know who you are and what you're looking for. Of course, there are more advanced steps: due diligence, legal paperwork, negotiations, and eventually, operating the business, but those come later. For now, the most important thing is to take the first step. If the business you're interested in is already taken. Still follow up. This builds a relationship. That way, when the next opportunity comes up, they think of you first. Building rapport with business brokers and advisors keeps you top of mind, which is essential if you want first access to new deals. Focus on businesses with strong revenue, consistent cash flow, and a fair asking price. If something aligns with your interests and criteria, it's worth digging deeper. Your journey toward business ownership and day one cash flow could start today. If this video gave you clarity, tap the like button. It helps the channel reach more people. And if you're serious about learning how to acquire companies, one of the best resources out there is a book called Buy Then Build. It's packed with practical strategies and inspired an entire generation of first-time business owners. If you want a breakdown of that book and others like it, check out the video we've linked next. The business is simple and scalable with low overhead. All that's typically required is basic infrastructure, decent lighting, and 1 or 2 employees to manage the facility. Most of the process is now managed online. Keep the space clean, climate controlled, and well reviewed, and your units will fill themselves. And because of the lean structure, self-storage businesses often operate with gross margins between 60% and 70%, a strong indicator of healthy, recurring cash flow. Finally, rounding out the list is auto repair. Whether we're talking gas-powered vehicles or electric ones, cars need fixing. From chipped windshields and dead batteries to worn-out brakes and oil changes, repairs are a constant requirement. People need transportation to get to work, to school, or on vacation. And when something goes wrong, they look for reliable local mechanics who can fix the issue quickly. That's why auto repair shops remain highly recession-resistant. Even in economic downturns, car maintenance can't be ignored. The gross margin profile of these businesses typically falls between 30% and 50%, depending on scale and efficiency. And if you're able to build a network of shops or even acquire a few over time, you've got a smart path to passive cash flow. Those were 10 business models with proven resilience, recession-proof, cash flowing, and ready to deliver returns from day one. So how do you find businesses like these? It starts with 2 basic steps. First, explore marketplaces like BizBuySell. The second step is outreach. Contact the brokers listed. From there, it's a matter of staying active, reviewing listings regularly, narrowing your focus, and acting quickly. When the right deal surfaces, check out platforms like BizBuySell and start exploring. Start small, think big, and remember, recession-resistant cash flow is not just possible, it is available to those who know where to look.